What if you work at Kaiser Permanente Health System or just some other for-profit hospital group or even just a for-profit physicians group because you're not allowed to be employed directly through the not-for-profit health system because of some weird state law? What do you do when you have $200,000 or $300,000 of student loan debt for med school or from any graduate program for that matter, and you're trying to qualify for public service loan forgiveness where you get your loans forgiven tax-free after 10 years of income-driven payments? This is a big issue for physicians, especially those living in Texas and California, where there's state rules that regulate who can employ physicians directly. Now, something to think about is the AIM Hire Act in Congress actually proposed adding physicians in the Kaiser system and other systems where they're employed through these indirect employment agreements because of state rules. This act that House Democrats tried to pass would have actually included all those Kaiser physicians in PSLF retroactively. So if you have more than $200,000 or $300,000 of student loan debt for med school, I would be very careful refinancing it and paying it all back, given that there's talk about making loans eligible for PSLF with this kind of grandfathering in of all these Kaiser Permanente physicians that were sort of left out in the cold. So think about that for sure. Now, also, you might not be aware that in states like California and Texas, they're community property states, you could take advantage of something called the breadwinner loophole, where you file taxes separately, equally distribute your income, and you pay 10% of half of your household income with minimal tax penalties, and you could pay for 20 years instead of 10 years under something like the pay-as-you-earn program, and then pay income taxes on the forgiven balance. That can, in a lot of cases, actually be very, very cheap, especially if you're a physician married to a stay-at-home spouse. And it also keeps your options open in case Congress does allow Kaiser physicians to receive PSLF at some point. So just be very careful that if your long-term plan is to work at a, seemingly not-for-profit health center that just happens to not qualify for whatever reason, you want to be real careful refinancing because you cannot undo it. If you have a lot of med school debt and you're kind of unsure about whether or not you should refinance because of this weird situation that you fall in, we've advised a lot of Kaiser Permanente physicians and also physicians in a lot of other kind of health systems. Reach out to us, check out what we offer, studentloanplanner.com/help. You can also check out the post below and leave a comment and share what you're going through trying to get PSLF in one of these weird health systems that don't qualify for these strange reasons.